Imagine the United States government creating a giant investment fund with your name on it.
Money talk.
Here comes the money.
$1 trillion national piggy bank that could pay for your schools, fix up the roads, and maybe even put money directly in your pocket.
I'm rich.
Too good to be true? Well, Washington is buzzing about that idea.
We're going to stand this thing up within the next 12 months.
It's called the Sovereign Wealth Fund, and it has everyone asking, will this make Americans richer, or is this a disaster waiting to happen?
Why don't we have a wealth fund? Other countries have wealth funds. We have nothing.
So stick around, because today we're going to be breaking it all down. How this fund could change your money, your life, and even maybe your freedom. I spent the whole of last week myself trying to understand this, and I figured out some things that I would like to share with you, so you don't have to do the work. Real quick, if you're new here, my name is Chika and welcome to the channel. I spent the last year studying financial systems and investment strategies while working with some of the biggest institutions in the world. Along the way, I've kind of seen firsthand how the rich, the wealthy individuals think about money differently than most people. And my goal with this channel is simple: to help you understand money the way the rich does, so you can start building your very own version of financial freedom. So if that sounds like something you'll be interested in, hit that subscribe button, because every week on Wednesdays and Sundays I break down money, financial markets, and how to protect your wealth. So let's get into it. First things first, what exactly is a sovereign wealth fund? In plain English, it's basically a state-owned fund. Think of it as the government's very own mega-sized investment account. Instead of letting extra money just sit around, the government invests in things like stocks, bonds, real estate, or even startups with the goal of earning profits for the country. Imagine Uncle Sam as an investor, taking government money and putting it to work. This concept started in places that had extra cash lying around, like the oil-rich nations. For example, when countries like Norway or those in the Middle East struck oil, they suddenly realized they had gobs of money flowing in. If they spend it all at once, it could cause inflation, that is too much money chasing few goods, and this could eventually mess up their economy. So instead, they stashed the surplus in a fund, invested it overseas or in long-term assets, and saved it for a rainy day. That's a sovereign wealth fund in a nutshell. To put it simply, a sovereign wealth fund is a big pool of money owned by the government, invested for the benefit of the nation. And guess what? Around 90 countries around the world own their own sovereign wealth funds, collectively managing over $8 trillion in assets. But here's the surprising part: the United States doesn't have one, at least not yet. But that might be changing very soon. So, why is the US suddenly talking about creating a sovereign wealth fund? That's the American New World Fund. Well, for decades, Americans really didn't need one, because historically, the United States had reinvested most of its money back into the economy, and it rarely had any large surpluses. In fact, the US runs typically on budget deficits. That is, they spend more money than they take in. But recently, the idea has gained traction at the highest levels of government. In February 2025, the United States government, yes, the White House, issued an executive order to develop a plan for a national sovereign wealth fund. The stated goals were pretty ambitious. According to that policy, the fund is meant to, I quote, promote fiscal sustainability, lessen the burden of taxes on American families and small businesses, establish economic security for future generations, and bolster U.S. economy and strategic leadership internationally. Wow, that's a mouthful. In simple terms, supporters in government hope a sovereign fund would, make money for America, reduce taxes, save for the future, and even use it as a tool for power on the world stage. I mean, they could have just explained it that way. Well, but think about it. If the US had a giant investment fund that could earn billions every year, maybe people wouldn't need to pay much tax, right? Or maybe the national debt could be paid down. It might even allow investment in bigger projects without borrowing as much. So it is definitely a bold vision. Interestingly, the idea isn't entirely new because previous US administrations have actually flirted with the idea. Even more interesting is the fact that 21 US states already have their own mini version of a sovereign fund. Yup, states like Alaska, North Dakota, and Texas have state-run investment funds, usually funded by oil or mineral revenues to secure their future. The most famous is the Alaska Fund. It takes oil revenues and reinvests it, and every year it pays out annual dividends to Alaska residents. More on that in a moment because that's a real-world use case of money in your pocket. Now, the US federal government, however, has never implemented this concept on a national level. Well, until now. Prompted by that executive orders, officials are drawing up blueprints for what the American Sovereign Fund could look like. They are trying to figure out how to fund it, where the money would come from, how it would be managed, and so on. The one idea floated by the administration is to seed the fund with import tariffs, basically money collected from taxes on foreign goods. Another idea is to use proceeds from selling or leasing federal assets such as government-owned lands and infrastructures. These are controversial suggestions and, well, more on the risk in a bit, right? But the fact is that this is being discussed and this signals that Washington is actually serious about trying out something completely new on how to manage the country's wealth. To really understand this, let's compare it with some real-world examples. How do other countries use their foreign wealth funds and what can America learn from them? First up, Norway. You might have heard of Norway's famous oil fund, the Government Pension Fund Global. Well, but everyone just calls it the oil fund. Norway struck oil in the North Sea, and instead of spending all that oil dollars, they started investing them globally in 1990. And what's the result? Well, Norway now has about, wait for it, 1.8 trillion in the sovereign wealth fund. Yes, trillion with a T, making it the world's largest sovereign wealth fund. That's an insane amount of money for a nation with just 5 million people. To put it into perspective, Norway's fund is so huge that it owns roughly 1.5% of all the stocks in the world. Yep. Imagine one country owning a slice of Apple, Google, Microsoft, and thousands of other companies. Now, Norway's situation is unique. They have oil money and a political culture of saving. But they are not alone, really. Other countries have big funds too. Many oil-rich nations have also set up their own sovereign wealth funds. For example, the United Arab Emirates, Saudi Arabia, Kuwait, and Qatar all have massive funds funded by the gas exports. And they use this fund to invest really globally and prepare for a future when oil runs out. China, on the other hand, has 1.3 trillion in their sovereign wealth fund, and this is built from huge trade surpluses. And China basically used this fund to invest in things like the Africa Development Project and to hold foreign assets that give them strategic influence. Now, Singapore, a little bit different, has a notable size fund in their sovereign wealth fund. Even countries like Ireland and Australia have smaller funds for pension or stabilization. Even in the United States, one classic example is the Alaska Permanent Fund, like we spoke about. Back in the 1970s, Alaska also found oil. Instead of blowing all that revenue, they created a fund. Today, that fund is worth over $80 billion. And every year, wait for it, a portion of that earning is paid out as a dividend to every Alaskan citizen. Some years it's been a few $100s. In a boom year, it's been over $3,000 per person. And I think the record was in 2022, where they paid over $3,284 per person. Can you imagine getting a check like that for just living in your own state? It's widely popular in Alaska. Now, let's translate that idea at a national level. One could imagine, in theory, a well-run US sovereign wealth fund might one day pay out dividends or at least fund programs that benefit all Americans. It's a really compelling idea, isn't it? So, if the US were to create its own sovereign wealth fund at a national level, it would be a bold experiment and one with high stakes. So let's break down what benefits this could bring and then the risk that critics are worried about. One big argument is that a successful fund could generate revenue for the government, thereby reducing the need to tax citizens so much. Imagine if the US had invested money and it earned, say, tens of billions a year in profit. That money could go into the national budget, meaning Congress wouldn't have to squeeze taxpayers as hard. In fact, the official plan explicitly says that the goal is to lessen the burden of taxes on American families and small businesses. So instead of raising taxes to pay for everything, the government could use investment returns from this fund. Secondly, it's a national nest egg. Think of it this way. This fund could act as a giant rainy day fund or pension for the nation. During good times, it gets stocked up. However, during bad times, say during a recession, the fund could help cover budget shortfalls, budget deficits, so that important programs don't get cut. It's like building a financial cushion for the whole country. Talk about an emergency fund. Over decades, the fund could grow and be used to, fund social security, healthcare, and other social programs without suddenly raising taxes. And now, let's talk about investing in Americans' future. Unlike Norway's approach of investing most of their money abroad, some proponents say that the US fund could also invest in strategic domestic industries. Think of cutting-edge technology, green energy, infrastructures, semiconductor manufacturing, and things that could keep the US economy competitive and secure. For example, the fund could help finance new chip factories, electric grid upgrade, and invest in companies developing AI, areas where America wants to lead the world. This could boost innovations and jobs and ensure critical industries have funding. It could also reduce American dependence on foreign investors, since the fund would provide capitals for projects locally. Yeah, let's talk about geopolitical power. A sovereign wealth fund could be a tool for soft power. Imagine, the US could use it to invest in projects abroad that align with its national interests. Kind of like how China uses its own fund to gain influence in Africa. For instance, the fund could partner with allies to build infrastructures in developing countries, strengthening this alliance and countering the influence of rivals, mainly China. It's a way for the US to promote strategic interests through investment rather than just aids and military means. Yeah, money talks, and a US fund could speak loudly on a global stage. And yeah, let's talk about the direct benefits to citizens, and maybe really, because this one is quite a bit more speculative, but it has people intrigued. As I mentioned, Alaska literally sends out dividend checks to every resident from their fund earning. Now, no one in DC has promised a United States dividend check yet, but some advocates wonder if one day a successful US fund could pay for dividends to all Americans, or at least fund national programs that everyone could benefit from. Even if it's not a direct check in your mailbox, this fund profit could be used to improve public services, infrastructures, or education without digging into your wallet. In essence, you could literally benefit because the country is richer. It's almost like each citizen becoming a shareholder in USA Incorporated. USA. Yeah, it's a patriotic vision. Instead of wealth being something only the private sector accumulates, the whole nation could share in the world generation of its resources and economy. Oh, that sounds pretty amazing, right? But there's always a but. This coin has another side, so let's flip it. To get those benefits, a lot of things have to go right, and there are pretty ways it could all go wrong. It's time to talk about the potential risk and pitfall of this grand idea. The reason some critics warn that it might make Americans poorer, not richer. Now, for the dark side of the sovereign wealth fund idea. What are the risks? How could this possibly go wrong? Well, let's break down the biggest concerns people do have. First one is, where is this money coming from? The number one head scratcher is, how do we fund this thing? Unlike Norway and Alaska, the United States isn't sitting on a huge pile of oil money or surplus cash right now. As a matter of fact, it's running on deficit. So, to create a sovereign wealth fund, the government needs to find cash to put in it. One idea, as mentioned, is to use import tariffs, basically tax foreign goods coming in and channel that money into the funds. But there's a catch. Tariffs ultimately tend to be passed on to consumers, which means you might pay higher prices at the stores as a result. It's essentially taxing Americans through higher prices just to fund the sovereign wealth fund. And that's not exactly free lunch, is it? Plus, experts say that tariff alone probably won't be nearly enough money to fund a massive fund. The administration even mused that tariff revenue could replace income taxes. Yes, eliminate income taxes, which analysts call highly unrealistic. I wonder why. Oh, sharp. Another funding idea is selling off federal assets like lands and buildings to get seed money. Yeah. But that raises its own issue. Do you really want to sell national assets to invest in stocks? And if you do, should that money maybe, go down to paying off the national debt rather than gamble in the stock market? There's a real concern here that the funding mechanism could end up hurting taxpayers or sacrificing valuable public assets. And now let's talk about the political interference and corruption. Whenever there's a big pot of money controlled by politicians, well, you gotta worry about political interference. Critics fear that a US sovereign wealth fund could turn into a slush fund for whatever party is in power. Imagine politicians pressuring the fund to invest in their pet project or to bail out favored industries. Without ironclad rules and regulation, the fund could be misused or suffer from nepotism and corruption. And this isn't just a theoretical worry. Let's get to that. It happened elsewhere. Sovereign wealth funds in some countries collapsed completely due to corruption and mismanagement. A famous example is the Malaysia 1MDB fund, which was looted by insiders and caused a huge scandal. And then there's Venezuela's fund, which suffered from political meddling as well. Yeah. So trillions of dollars at stake can literally attract all sorts of shady behaviors if oversight is weak. A US fund would need strict governance, independent managers, clear rules, audits, and insulation from day-to-day politics. If not, well, it could fall victim to special interest capture, meaning certain groups and cronies benefit instead of the public. And there's also the fear that Congress might raid the fund whenever they need cash, undermining its long-term purpose. Essentially, if it isn't managed with extreme integrity and transparency, it could do more harm than good. And yeah, let's talk about market distortion and the risky bets. So that's another worry, the economic side effects. Because if the US government suddenly becomes one of the world's largest investors, how might that distort the market? For instance, look at it this way. If the funds invest heavily in US stocks or companies, that's the federal government literally picking winners and losers in the private sector. Something that makes free market proponents uneasy. I completely agree with that. It could inflate asset bubbles if not careful. On the flip side, if the government decide to invest mostly overseas to avoid meddling at home, people might ask, why are you investing American money abroad instead of here? That's a catch-22. Also, investing means risk. Markets can crash. If the sovereign fund make bad investment or hit a global financial crisis, it could lose hundreds of billions of dollars. Who covers these losses? Ultimately, the taxpayers might, directly or indirectly, and that could hurt the economy or force budget cuts, the opposite of what's intended. Remember, unlike private sectors, if the government lose money, it might translate to less funding for public services or higher taxes later to fill that hole. So there's real risk of financial loss. Now, let's talk about mission creep. Because with so much money, there's temptation to use the fund for all sorts of things outside of its core mission. A striking example, TikTok. Yes, TikTok, the app. When discussing a sovereign wealth idea, it was even suggested that the fund's money could be used to buy out TikTok to address security concerns. That raised a lot of eyebrows. Buying a social media company because of geopolitical issues is not a typical use of a sovereign wealth fund. This example showed the risk of mission creep. The fund could be pressured to make investments for political or national security reasons which might not be financially sound. This could diminish returns or entangle the fund in controversies. If the public starts seeing the fund as a tool for government takeover and political agendas, it could lose its credibility fast. The focus could shift from growing wealth to serving short-term political gains, which in turn undermines the whole point. And then there's the issue of governance and transparency. Setting up $1 trillion fund from scratch is no small task. The US will need a very robust legal and government framework. Who manages the fund? The Treasury? An independent board? The Federal Reserve? Or a new agency? How do you ensure that decisions are made by financial experts and not just politicians? If returns 1 year are bad, would there be political pressure to change course imprudently? There are calls that if this happens, it must have regular audits, public reporting, and congressional oversight, just so it doesn't go off rail. Without these safeguards, the fund could end up wasting public money or taking a hidden loss. Some economists worry that if not done properly, a sovereign wealth fund might just shuffle money around without creating new value. For example, taking money from one pot, say tariffs or asset sales that would have gone to the Treasury, and putting it into another, which is the fund, and then back into the budget, essentially moving money in cycle, potentially losing some to fees or, making bad bets along the way. There's a lot of risk involved. In summary, a US sovereign wealth fund could be a brilliant way to turn the nation's wealth into more wealth if managed properly. But if done poorly, well, it could be a very costly fad that burdens taxpayers, distorts the economy, or even lead to scandal. So here we are, America, crossroad of a daring financial experiment. Will a US sovereign wealth fund make you richer or poorer? The truth is, it could go either way. But one thing is for sure, the stakes are sky high. Now, I want to hear from you. Would you support the US creating a sovereign wealth fund? Do you think it's a genius move to make the country and maybe its citizens richer? Or is it a risky scheme that could leave them worse off? Let me know in the comments. If you found this deep dive interesting, hit that like button and subscribe for more insightful breakdown on big economic ideas and how they affect your life. We'll be tracking the progress of this American Wealth Fund proposal and other game-changing financial stories, so stick around for updates. I upload new videos every Wednesdays and Sundays. Thanks for watching, and until next time, stay curious and stay informed.